Hello and welcome to today's Trading the US Open live here with the live trade room. Hope you're keeping well. Without further ado, let's get straight into today's session. If I can start, as we always do, with our risk warning, and I'll just explain what we do. We have a bit of a process when it comes to trading these financial markets, which actually starts with planning our opportunities the night before. If you go to the Live Trade Room website, www.thelivetraderoom.com, you'll see that we have what's called our daily trade plan webinar at 9 o'clock every evening for 30 minutes. What that allows us to do is identify these high probability trading opportunities that we can look to get involved in today's market. So it's a way in which we can select the markets that we need to be focusing on, narrow down the options and the focus so that we can plan our trades as best as we possibly can, understand the fundamentals and the sentiment and the technicals behind each trade, and then we look to apply it when we hit our trading screens for the European Open. And this is a session that we go through with you guys through YouTube, where we look to trade the US Open. And look for opportunities at this point in time. So we go through the whole process with you, so hopefully you'll find it very interesting. Hopefully you've had an opportunity to look at a risk warning currently up on screen. Of course, all traders need to embrace the risk management side of trading these financial markets. This is what we take very, very seriously. And we invite you guys to do the same. Now, there's a means in which you can do that. The vast majority of traders will really struggle to tell you relatively precisely how much capital are committing to a trade, and that's really not. It's a very poor discipline if that's what you're doing when you're engaging with these markets. If you predetermine how much capital you want to commit to these trades, and calculate your trade size effectively, it means you're not sizing, you're not undersizing, you're just trading the levels at which you want to trade at, and psychologically that's a much better position to be in as well for traders. If you're wondering what's going on with my ears, I'm listening to this broadcast through on one side, and we have a live squawk, so I'll just be getting updates as we're live. And of course I'll be able to pass on that information, and this squawk as well, we'll be making it available to our traders, so you'll be able to get access to it, and it's hopefully an affordable option for you, because it is now quite expensive, these squawk, where you're getting a constant live feed about market updates. So moving along then, what I'm going to do is the first thing really that we need to be mindful of when we trade is we want to understand if there's any major news events that are likely to impact our trading over the course of the day. And with that in mind, we can use FOREX Factory. It's quite a nice, concise way of trading these markets and knowing what are the fundamental news events are that we would need to consider when we're engaging with these markets. And today, of course, is Tuesday, February the 9th, and not really an awful lot to deal with. As you can see, we've had some Australasia news during the Asian session, and we don't really have that much to deal with, to be fair, from a data-driven perspective. We have the ongoing macro economic events, which really have been dominating markets for quite some time. There is this exuberance within these stock markets at the moment. You're probably hearing an awful lot about it, and we're seeing a lot of sort of crazy price action in very specific stocks for very specific reasons. And now we discussed an awful lot over the last few weeks about the ins and outs of those types of moves. Huge volatility, very, very significant returns, but unfortunately with these with very significant volatility like that, we can often people can get caught up in it, and as many ironically as many success stories that you'll hear. You'll probably hear an awful lot more of. In fact, people probably don't necessarily post the difficulties that they have with trading these financial markets. So from a data-driven perspective, there's very little to have to contend with. The next very minor, and we look at the impact. We're interested in the orange impact events and the red. So, for example, tomorrow we'll have Chairman of the Fed, Jerome Powell, due to speak, and you can get some information on here. He's due to speak at a webinar hosted by the Economic Club of New York, and really the markets do tune in to see if there's any clues we're given to potentially future monetary policy decisions and concerns regarding increasing inflation as well. And of course the Fed, they use interest rates as a means in which to offset inflation if it becomes a little bit too uncomfortable. Of course, at the moment we're in this low rate, low inflation environment, so things can remain as they are with a huge amount of capital in these markets, and that is something that is without a shadow of a doubt supporting these markets to a very, very significant level. So just sharing our screen, our charts currently up on screen. We're looking first at the euro dollar. Let me just jump straight over to the US indices markets, because we'll have a look at the S&P, and you can see what's happened really over the course of today. And we're obviously we're on the verge of the US Open at this point. So this is a bit of sort of pre-market price action, and you can see it's just showing a little bit of negativity. And now what's quite useful to determine as to whether we see that negativity creeping in across the board or not. So we can just look at some of the other equity markets. Very little is happening in the NASDAQ. The Dow Jones is very similar to the S&P 500, so we've got that situation where we're seeing a bit of softening in the US indices. Very little's going on in the FTSE. The DAX is just rolling off the highs. Yesterday's highs were just squeezing a little bit lower. And to finish off, we've got a bit of negativity in the Nikkei as well. So across all the major markets, we're seeing the indices just begin to roll over to the downside. Hello, Jonathan. Good evening. Nice of you to join us. I hope you're keeping well. So look, without further ado then, we just need to keep that in the back of our minds when we trade these financial markets, that the indices markets, they're just softening ever so slightly. It means we're in a very, very mild risk-off market conditions. So then what we would like to do, and how we'd like to use that information, is to see if the correlations are stacking up in line with that analysis. Sorry, let me just turn on our squawk. There we go. Sorry, just bear with me a couple of seconds. Sorry about that. I've disconnected my squawk rather than turning it on. Okay, good. So I will be getting updates through my earpiece, and I'll let you know if there's anything of any significant interest to our trading, because most of it, certainly today with today's level of data points, perhaps not too useful. So we've just done a very, very quick bit of analysis. So now we're just looking at some of the correlations, and we're just having a quick look at gold. So gold is benefiting from a little bit of softening, and the thing is, the reason why we talk an awful lot about risk on and risk off is we want to know where the capital is going. So if it's risk on, there's a good strong appetite for capital to be, piling into your more riskier assets like your equity markets and your indices. And if they start to soften, then what that often means is there's a bit of profit taking, and they start taking capital out of riskier assets and putting them into other markets, perhaps like your safe havens, which is why we talk an awful lot about risk on and risk off. So if it's a mild risk off day, then we can expect to see your safe havens, a bit of capital coming into your markets like your gold market. So we're seeing that push to the upside. The other markets could be the yen. So we can see the yen look like it's strengthening. Across the board. You can see today's big move against the dollar. So these are rollover trades. So these are probably. It depends on your trading approach, but we like the breakout trade to the upside, and we like the pullback trade when prices come back just a little bit lower to 104.48. So we don't necessarily always want to be all things to all men in every type of trade. So there's the breakout trade to the upside. There's the reversal off the high, which is what we saw 3 trading days ago. There's the pullback, which we generally step back from because it's very difficult to call whether we'll find support actually at a higher level, or whether it will come all the way back to the 104.40 level. And if that's the case, that is our cue to start looking to buy the next leg to the upside. So we've had a considerable move already. So what we can safely say, and looking at the Swiss franc as well, we've had this little bit of rollover price action as well. So what we can say is we are trading a risk off market condition. And that's really important for us because it means we don't necessarily get in our own way. We don't want to go against the grain. When we're looking to go where the capital's going, we don't really want to be sitting here telling you guys what our opinions are in these markets. It's the markets decide what happens. Yesterday, for example, just to review yesterday's trade, we only took one small trade. And if I get up my pen, I'll share the analysis with you just quickly before the market opens. So we just go through this process when we trade these financial markets, and like I said, it's a case of going with the capital. A lot of traders will look to sell the highs, and they'll tell you how to sort of buy the lows and all that kind of stuff, and what they're trying to do is catch a falling knife. It's generally not based on anything that useful, that you can work with, that you can perfect, that you can time. However, we do appreciate we've got a number of traders that trade these markets in a whole variety of different ways, and there is, in reality, there's no one correct way of trading markets. It's what's profitable and it's what's not profitable. And all traders go through tough trading conditions. Every trader... positivity out of from Matt Hancock again, the health minister, who's speaking in the House of Commons, is very is of the opinion that regarding the virus, that the UK economy is beginning to turn a corner in terms of dealing with the virus. The success that they've had with the vaccine rollout has been quite impressive compared to other jurisdictions, of course, and that's the positivity behind the British pound. While he's speaking, is there positivity behind the pound? The answer today is yes, and actually that is one of the trades that we'll be looking at to the upside today, with more upside. So I'll continue to give you these updates from the Squawk. We're actually in the process of making it available to our traders, actually. At hopefully a discounted price or a very affordable price for those of you that do want access to a Squawk service. It can be very useful during actually more volatile, high number of news events in any particular trading period. It can be quite a useful tool to use. So I think we can safely say that we're trading a risk-off market condition today. Now, just before we start making decisions, we want to see how the dollar is performing. And what we can see across the board is we're seeing considerable dollar weakness over the course of the day, and the pound is an ideal candidate to the upside. The significant weakness in the yen, the Swiss franc is really strengthening, so this is benefiting from the yen, and the Swiss are benefiting from that kind of risk-off trading condition. The commodity currencies, the CAD is strengthening just marginally. While we're looking at the CAD, it's always useful to just see what's going on with the crude oil market. They're a net exporter of crude oil, so it does react with the crude oil market, the dollar CAD, the loonie. So it's worth knowing and understanding these correlations as best you can. It'll take a bit of time, of course, but we can clearly see we are in a dollar weakness type environment yet again. So some of these are sort of in fairly tight periods of consolidation. Some of them have made the move to the downside, followed by quite an aggressive pullback. So it's a case of trade selection really at this point. So we'll come back to the dollar because I just want to share our analysis really with the euro dollar in just a second. But the euro pound, it is sort of struggling to maintain its move to the downside. We keep getting these little retracements off the lows. Our bias is still ultimately lower. There's a nice sort of move to the downside below these levels. If we take a swing low, you could easily sort of see this market coming down to the 86.80 level. So we're just squeezing a bit higher at the moment. If we zoom in, you can see what's going on here. So, I mean, if you were a buyer in this market, you'd be just as nervous. You know, you wouldn't be excited about the potential upside. You know, we're probably likely to run into some resistance, and prices are probably more likely to squeeze lower than they are to actually push higher. But we shall wait and see. And we're just benefiting from a strong yen as a result of these risk-off market conditions. So for those that are looking for sort of a higher yield, are just stepping back from the indices markets at the moment. They're just taking a little bit of a pause, which is understandable. You know, these markets are a kind of a living, breathing organism. It is a good way to understand the collective. It's a good way to measure the psychology of those that participate in these markets. And we've seen, you know, 5 trading days of really quite bullish price action and 2 days of negativity where the market just takes a bit of a pause. We don't get to see much volatility to the upside or to the downside before we get the continuation trade. So we'll keep our options open. We have a new all-time high in today's market, so that's the important thing to consider. By no means is this like a game over trade to the upside. Far from it by the looks of it. We're more likely to see this price action maybe just soften ever so slightly. Okay. In Spain, they're really struggling. They're looking at the peak of their. So in different parts of Europe, they're struggling in very, very different ways. So that might be a little bit more relevant to those, you know, trading Spanish markets. Not so relevant to us, but it's just to show that different jurisdictions are able to react very, very differently. Some will have prolonged lockdown market conditions, and will obviously foot the bill for that, and that's why there's such an importance on Europe, I guess, making sure that they secure their vaccines. But of course, you know, every country is looking to secure the vaccines necessary to vaccinate their economy so that hopefully the idea is we'll be able to get back to some form of normality. Not that anyone knows what that is right now. So I digress a little bit. So it's important for us now then when we trade. Where's our euro dollar? It's just moved across one. So these are the markets that we look at down the bottom, and just want to explain now. I've got my tool back. We speak an awful lot about levels of support and resistance, and this market reached the high back at the 123.48, and we saw the pullback, which is very, very normal. Then we attempted to make a new high, and you would expect it to be pushed up to that level, and it fails. And actually, we saw this market break over to the downside. So there's your high probability sell trade. Now we're getting the pullback. So markets, I know we keep saying, on a regular basis, but markets do not move in a linear fashion. So you get this, and some markets are a little bit more erratic than others, but that's how a market is more likely to move to the upside, with all sorts of quandaries within that move. So you never get that straight line type environment. So we need to sort of take that on board when we trade markets, and we look for strong levels of support and resistance, and here is your level of support and resistance in this market. And that's why yesterday we were looking at this level here and expected this market could make a little bit of a move lower, and the caveat is always the case of if the dollar starts to weaken across the board, and unfortunately we didn't get to see that. So we've had the move, we've had the pullback, and we've had the extended move below that level, but we've had some strong buying coming in, and today's sort of pullback is quite important, because we've now broken back above the monthly low, which is just sitting in this level as well, and we're pushing, it looks like, back up to the 50 period moving average 2150 level. Let's see if we can get up to that level. So what we're going to do is just before the open, I think we're due to open now in about 15 minutes. We'll just have a look at these on the daily time frame. We'll kind of review our analysis from kind of last night's live trader, and unfortunately I do apologize for those of you. We had a technical issue with our internet connection and our software, our webinar provider as well, so we were really struggling to actually broadcast the webinar, so we weren't able to actually go through these in some detail last night, unfortunately, but everything seems fully functional again this evening, so we'll be able to go through this. So the euro dollar is just pulling back from the low, so we want to try and cherry pick the higher probability trading opportunities, and like I said, the pound dollar is primed for further upside. So we've now broken above these highs, 37.57 level. We're still above that. We're currently pulling back, which is not a significant surprise really, as we approach the US Open. You often get a little bit of late day selling creeping in, and that's kind of what we're seeing. So we'll come back to the pound dollar, so we'll identify that. We would actually like to see how price behaves around the 104.40 level. So at this point now in the trading day, it doesn't give us great opportunity to squeeze lower. Last night, it would have been a much better opportunity to get involved in this trade, but as you can see, the last sort of three or 4 hours, we've not seen a significant move. So we've seen the majority of this move occur during the Asian session, which again is another thing that we need to take into account. We can often trade using pending orders. It's just we haven't used pending orders now for only a handful of occasions over the last year or so. and it's just purely down to the considerable volatility we've been seeing and kind of the more erratic market conditions that we've been trying to overcome. So hopefully there's a little bit of calm beginning to creep in. There's a little bit of positivity as well about so we've got the Northern Ireland protocol, and Boris is now talking about trying to make sure that there's no disruption, and a lot of the difficulties with Brexit in terms of the movement of products seems to be sort of leveling itself out a little bit. There's seems to be sort of a 90% flow of products in and out of the UK. There's still a small percentage that do seem to be struggling. So, but all in all, it seems to be working fine for now. So the dollar yen is just rolling back off the highs, and we're gonna. We'd like to get into this market around the 104.40 level, and again, it may be a case of we look for that trade tomorrow. It may be a case of tomorrow we'll start to see some dollar strength. You see, at every particular point in time, okay, the AstraZeneca vaccine, they've made an announcement saying that they're likely to get from between 150 million doses a month to 200 million doses a month in April. So that's really good news to get that distributed. So it looks like we are, 2, maybe 3 months from being able to get back to some form of normality with regards to this very, very destructive global pandemic along these lines, and it's really fueling a bit of optimism in these indices markets. So it is an important thing to bear in mind. The dollar Swiss is just rolling back over to the downside. If we identify levels of support and resistance, which would be in here, then this is an area from which, from a price action perspective, we'd actually expect prices pushing the other way. So all we're doing right now is breaking out to the upside. We're pulling back, and this is your next opportunity to push higher, although the market conditions are not supportive of those trades just yet. So so we're getting considerable pullbacks across the vast majority of the dollar pairs. Now the pound dollar is, technically speaking, a standout performer in comparison. The dollar yen is in this kind of sideways moving pattern, actually marginally bearish, and the Aussie dollar is finding a little bit of support. But again, what are the chances on us seeing this type of price action and seeing something like that where we can draw these lines? I mean, this is kind of what we do every evening. We have this little sort of bearish price action, so that's kind of a likely outcome. This little bit of price action here is a little bit concerning, so we'd want to just monitor and see what the price action is telling us about that move. So again, will we see an exhaustion candlestick perhaps over the course of tomorrow? So really, with a lot of these dollar pairs, tomorrow could be the more opportune opportunities if we start seeing some dollar strength in tomorrow's markets. So keep an eye out for that. We're in this sideways moving consolidation period here for the New Zealand dollar. So really, we want this market to either close above the 72.28 to the upside, or close below the 70.89 to the downside. So actually, we're only in sort of 130 pip range actually over the last 6 weeks, which is not very much at all. The euro pound, again, we'd want to go with the direction of the market, which is to the downside. Today is a buying candlestick, so we want to try and stay out of that. And that's a good little lesson to learn actually from yesterday, because yesterday when we sold this market at this level, obviously it's reversed to the upside, so we made sure we calculated our exposure in these trades. It was a 1% trade for us. It completely reversed. But just to clarify, when we entered this market, it was a bearish candlestick, and it is worth noting that if we're looking to trade in the direction of the capital, we generally want to go in the direction in which the market is moving. So just to give you a good example, so really, if we were looking to sell this market, then we can see that we've got a couple of days of selling, and that can often give us a green light to sort of look for opportunities to sell, as opposed to sort of looking for multiple buying opportunities on the way down. So trade in the direction in which the markets are moving. That's always been quite a pillar for us to build upon. Dollar Swiss, it's pulling back. So we've looked at the dollar pairs. The yen trades are quite interesting. It is one of the stronger markets at the moment. Again, another pillar for when we trade markets, we want to avoid trading strength versus strength. So the pound is quite strong, and also the yen's quite strong, so they almost count each other out. The euro is quite strong, and the yen is marginally stronger. So by default then, probably a marginally better opportunity would be selling the dollar yen, and if prices were at the 105.10 level, something around that, then that would become a decent opportunity lower. So moving on to the commodity markets, we've got gold just bouncing back, and again it's fulfilling its risk off criteria. So again, if we're running up to this 50 period moving average, in and around the 1850 level is a point at which we may start to see some more selling coming in. So we're almost at the extremes of these decision making points for some of these markets. Crude oil, we've just got a day of indecision after actually some really strong, and there's your breakout trade to the upside. So generally when we see markets extend like this, what you want to see is the pullback. You want to see it come back to 53.68 and then look to get in around that kind of price to the upside. So the S&P, do we want to go head to head with the buyers in these markets? Today probably not, but tomorrow, so for example the DAX, that might give us a marginally better opportunity for this market to roll over to the downside, because we've again, if we really scrutinize this price action, we have some indecision at an all-time high around the 14,135 level, and what's happened on Friday, we closed at the exact price of 14,075, and then when the markets reopened on Monday in the early hours, we gapped quite considerably to the upside. So the open in this market was actually 14,158 from a close of 1475. So we have, so we've seen this market gap up about 75-80 points to the upside before really rolling back over to the downside, and then we've seen some continuation. So we'll certainly monitor it and see if we've got an opportunity to sell the DAX. The problem with the equities is they're really keeping a really close eye on recovery from the coronavirus and the distribution of vaccines, and the optimism that that's likely to bring these markets. Of course, when we're all allowed to go out into the open and go around the shops and start buying and using a lot of that pent-up capital now. So deposit rates are at all-time highs, so people are clearly saving an awful lot of money. So when we get back to some form of normality and the service industries start coming back, the restaurants and bars and nightclubs and your hotels and things like that, all your leisure facilities, when they start coming back online, it's likely to give the economy a very, very significant boost. And demand is very much expected to be quite significant. So we can keep a close eye on these markets. You see the failure to the upside for the New Zealand. You see, tomorrow we might get some really quite interesting opportunities in these, because they're all coming back to really strong levels of potential support. And to be a little bit more precise, it's probably easier to see the dollar yen trade. You know, this is a strong level to find some support. The dollar Swiss is running into these levels of previously resistance, which now become support. And that's what we want to do as traders. We want to identify strong levels of support and resistance, which are identified by these levels, and just look to trade them. So we want to trade what we see and not what we think as traders. That allows you to be somewhat objective in your decision making, and that for us is something that we talk an awful lot about as well. So we are left really with a couple of opportunities here. The pound dollar to the upside, just going in line with this move higher. And the other market, quite strangely, is the DAX. So it's now just a case of whether we will we get the price action that we need to get involved in this trade. But again, we'll go through that motion, and we are now hitting the market open, the cash open in the US, so we can expect some volatility in these. Oh yeah, brilliant. So we'll have a look at these in detail. We know which markets we want to trade. We know what direction. Thank you very much. We know which direction we're looking to trade these markets. So now we want to just set ourselves up for those trading opportunities. So this is effectively the process of multi-time frame analysis. So we know on the bigger time frames the direction in which these markets are moving. The DAX to the downside, the pound dollar to the upside. So let's take a look at these and let's see what's been happening. And straight away there's quite a significant amount of congestion, isn't there? So we're kind of congested within this area, just sitting up on screen, and we're smack bang in kind of the middle of that congestion. So what does that mean? So that was the breakout to the upside, the all-important level, and prices have just bounced back to that particular level. So we can see that the the actual price action more recently, since the 4th of February, is taking decent strides to the upside. This probably an hourly chart is probably marginally better. So you can see the range, you can see the volatility in this market. It's very much up and down, largely trading between the 137 and the 135 levels. So there's a 200 pip range in this market. And last night we broke to the upside above the 137.59. We know this market is range bound. We've been talking about it. So we know there's been a lot of rejections of the highs and prices have been bouncing off the lows. So it's not that surprising. It's a little bit on the messy side, but in terms of approach, what we can do is, if we anticipate that this market is going to continue to the upside, we can look for a breakout of the 137.87 for further upside, and place our stop loss, just below this little multi-day, multi-week high just sitting in here. So that would be the approach. I'll leave that just currently up on the screen for you. And now we can just have a look at the DAX. So once we have this channel kind of fully operational, we'll kind of have our charts straight up on screen. This is kind of more of a, more of a walkthrough, really. So and to be fair, we may have seen the moves for the day really at this point, but we shall see. So again, we can see that this market really gapped to the upside. This was the very significant gap. It then reversed relatively quickly. This is on an hourly time frame, and then we've seen the structural failure to the downside. So there is your move lower. So as a result, at this point, there's a strong rejection to the downside. Once we've made an all-time high, there was a very sharp rejection of that level. So you start to build a profile, then you start seeing a further structural failure to the downside. You see considerable bearish momentum recently since Sunday night. All the major candlesticks in this market to the downside, and on the daily time frame there is plenty of movement lower. So all of a sudden you can build up quite a nice sort of picture in your own mind that is likely to give you a little bit of confidence to say that, okay, well, right, let's look for an opportunity to push this price lower. So with that in mind, now we can go searching for, at what price do we want to get in? What would represent good value in terms of that moved further to the downside. And this is where support and resistance comes in. This is where I suppose reading charts is really quite important. This little range in here, we don't need to be too prescriptive, but this little range is a strong level of resistance. It is even previously it is previously where this market is actually gapped from. So we were trading around these levels and we gapped to the upside. So it is actually the point at which the market's gapped above. So we like to see situations like this on these markets. And then the market's rejected these levels on many occasions. So there is a lot of sort of downward momentum at those prices. That's just, hopefully you can see that, and you would agree with it. And that begins to change once prices break above. So now you're looking for buying opportunities, but more recently that has actually failed, and we're now trading below this very important level of resistance. So previously the market just rolls over, and if we fail to make this move to the upside, which we have done, we're now looking for that next opportunity further lower. So so that's the process. This is an hourly candlestick, and you see we've had a bit of a pullback. Last hour we started to just extend lower, and now it looks like we're just creeping below that hourly low. See, this is quite a significant gap to the downside. Do we want to put our stop loss this far away? There's probably no need for us to do that. We can look to get in if prices just break below this hourly low. You don't want this level to become a level of support. You actually want prices to break below the 13,993 level. And we're looking at an entry price, around this kind of price in here, with a stop loss up at that level. The pound dollar, there's your entry price. Let's put a little arrow to the upside. Here we can put a little arrow to the downside, and we could argue this is roughly your stop loss. So we're using technical levels. Good evening, or should I say good afternoon now, Inspire speaking. I hope you're keeping well. Any further questions, guys, of course, feel free to post them into the chat box. We'll be happy to answer any questions that you might have. And if you do need more information, like I said, we've got quite a coherent offering for traders. So we do our planning for these markets the night before at 9 o'clock UK time for 30 minutes. We discuss our trade plan for the following day, and we actively trade that trade plan through our signal service. And when we get into trades, we let you know about the performance of those trades. So this is obviously a free to access live trade room. So obviously no cost of charges whatsoever. There is an awful lot of education as well. We've developed our own trading courses. We've got about 50 hours of content. Now there are different levels, and it's all on demand, so there's no sort of prerequisite really to have to go through it. But those of you that are interested in sort of securing a very important, I just want to see where this daily high is. Yeah, we're sort of in the correct area. Just move that along. So there we go. So this is our entry to the upside, and this is our stop loss. And we need the DAX as well to actually break below the 13,993 level to the downside. And we've got a nice, neat stop loss placed above the 1484. So for us, again, we teach traders how to calculate trade size. So we have our trade size calculator. So we've got all the little tools that you need to give you the weapons necessary to be consistently profitable in this trade. Just looking very carefully at the DAX. If I zoom in, and I'll just take that off for a second. If you zoom in and look at this price action, we're very interested to see what happens with price action, and it gives us the confirmation necessary to make decisions. And you can see that the last 4 hours, or should I say, no, the last 4 candlesticks. This is a 15-minute time frame. So the last 1 hour of trading has been very much indecisive. So it's really not that clear whether it pushes higher, whether it pushes lower. If we look at this on the daily time frame, it's pure indecision. So we're only wanting to get into this market below the 13,993 level, and we've got a clearly defined stop loss to the upside if that's the case. I'm just going to bring that down just a touch. Yeah, and the pound, you know, looks like it could potentially. So there's a lot to trade in the financial markets, but there's an interesting way in which to stack the odds in your favor, to understand what's going on, to determine at what points do you want to get into the trade, at what points do you want to get out of the trade. All of these things, you know, are constantly, you know, discussed, and decisions need to be made. So we've got these little narrow lines because we've got the close and the open, the high and the low. And if the first thing is, if we get a close above the 37.81, that allows us to sit up in our chair and to just take note about what's going on, because we could be close to like a decent breakout trade. There's only 6 pips between the close of the high and the high of this little range, which is the 37.80, and the open and close prices at the 37.81. So literally a 6 pip gain. So you know what it does is it gives us a little bit of time really on this trade. So so the DAX, we do need to see this little bit of rollover. It would be not so much a scalp trade. I'm going to get rid of that. So it's not so much that it's a scalp, because you know, if we get down to these lower levels, the 13,960, then we can expect this market to actually continue lower. And from a trade size perspective, every trade is different. Every trade is different, so there's no and we can see this market just rolling over now. So we come into this trade, we might see this market and see if we can trade it just before so now we're just getting that move now, so we can look to get into this trade. We do teach traders how to calculate trade size. So so 1485. $14.85. Okay, so okay, I'll just put the stop loss in. So we're going to look at 14.087 as a stop loss. Okay, I'm just gonna just pause just a second. We expect it to kind of flush lower, so I've got the trade ready to click the button. below the 13,993 level, we're ready to sell. And it's just come back, and it's actually closed precisely at that level. So now prices are just pulling back a little bit. The pound dollar is just in this drifting in this sideways moving price action. Okay. I'm sure it will flush lower, but we just want to be a little bit patient. If there's any questions about anything covered in this webinar, feel free to post it into the chat box. The markets, the equity markets are just softening just a little bit. See, the other thing as well, we have a psychological level in here of the 14,000 level, and really it's not a bad sort of decision to be looking to sell below 14,000 and be looking to buy above it. That would be, broadly speaking, a bit of an objective. But as you can see, we're just about to get the trade, and on a 15-minute time frame, which is not an insignificant time frame, we're beginning to see a little bit of buying coming in. So what it can do now is just allow us to just back off a little bit. The psychology of trading for us, if the trade exists, we'll trade it, and if the trade, if we need to give the opportunities a little bit more time to evolve, then we can do that as well. People ask us, you know, like, sorry. Okay. So really, time frame entry. We want to be opportunity focused. We don't want to be frivolous with our capital. We don't want to be jumping into trades for no reason. We want to try and stack the odds on our favor when we trade, and we have a process in which to do that. And really, we recommend every trader to have a bit of a process for them to look for the opportunities, identify which markets are likely to give you the better opportunity trades, put together your trade plan, and then look to trade that plan. You hear it all the time, plan to trade and trade the plan. It's just very few traders are able to do it, or they don't do it for whatever reason. So instill these principles and practices. And we used to be quite disciplined with our entries and exits. So we used to trade the European Open and we used to trade the US Open. Now we're getting opportunities at 5, 6, 7 o'clock of an evening when the European and the UK markets shut. So what we've had to do really is to adapt to those additional time frames and be a little bit more not so prescriptive with the times at which we enter or how long we're in a trade for or anything like that. We keep saying, when do we exit markets? And for us, it's always when the markets tell us that the trade no longer exists. So we're constantly looking for the market to validate why we get into our trades, and then looking forward, looking for the markets to validate exactly why we're getting out of the trade. We're not applying kind of arbitrary rules, 30 point winners or anything like that, which is very subjective. It's very much my opinion. It can keep you somewhat on the straight and narrow to a certain degree, but it's not trading markets. And for us, we want to limit our losses. So like yesterday, we took a sell trade in euro dollar. We took a 1% trade on it. We took a loss on that trade. Fine. We don't sort of get too bogged down on it. We sold it at an important level of resistance, which is important. It wasn't just a random price in which for us to sell the euro dollar. It was at a very important level of resistance, and markets reversed and they moved the other direction. Which is absolutely fine. It's market's prerogative to do that, and it's up to us to look to give every trade that opportunity to make us a considerable return. So again, a lot of traders, they learn how to limit their gains and winners. So for example, they might experiencing quite nervy, erratic market conditions for a number of weeks. They get into 2 or 3 trades, they perhaps make a bit of profit on those trades, and they look to bank that profit. And we often ask, why did you do that? And for no reason apart from their own nervousness with actually clicking a button and making sure that they at least generate a profitable trade. Well, that's fine, but all you're doing is you're just waiting for the next loss to come your way, and that's the problem. If you adopt that mindset and really limit your losses, but give the opportunity at least for you to generate a very, very considerable winner, and it does take time and you do go through periods of drawdown, it becomes very frustrating and annoying and things like that, but you're going to catch those winners, and when they do, you can see a nice sizable return in a relatively short period of time. So it's changing the psychology, it's changing the way you think of these markets. If I'm nervous and wanting to just book in profit because I have some sort of win rate I'm trying to achieve, then you're probably not going to see the returns that you're looking for over a longer period of time. You might do over a short period of time, but perhaps not over a longer period of time. So all of these things come to the fore when we trade. I'm just looking at the pound dollar currently on screen, and it's looking like we might see that next leg to the upside. I do have to unfortunately just pack up in a few minutes time, but it looks like we're getting that. So now we can just go down in the smaller time frames, in a time frame that we're a little bit more comfortable with, and let's see if we get prices breaking above the 37.87. You see, the thing is about support and resistance is that there's sellers defending these levels. So that's why this level in here is defended. So every time the price comes in, you're getting sellers pushing prices This is interesting here. This is consolidation at that level. It'll add to the momentum to the downside, and look at this sideways moving price action, and then we just pull back a little bit and we drift sideways again. So it can add more momentum when we do get that break to the downside, but we need to be careful, of course. And there so far is the rejection, and the candlestick will close now in a couple of minutes. So that's the pound dollar trade. It's just rejecting these highs once more. So this might move sideways for the next few hours. Or it might move sideways until tomorrow, and I've suggested that we can prepare ourselves for a little bit of dollar strength tomorrow. And from a technical perspective, those trades would stack up an awful lot more. Not so much the CAD dollar, but maybe a bit of selling in the Aussie dollar. The New Zealand's off the table as well, but the euro dollar, if we pushed up just a little bit higher to 21.50, and then it started to roll over. But your primed opportunities, if we see a bit of dollar strength tomorrow, is the dollar yen and the dollar Swiss to the upside, and maybe the Aussie dollar. So there's probably three primed opportunities. The gold market could be another one. This would be because the gold is crossed with the US dollar, and the price of gold is quoted in US dollars. The value or the perceived strength and weakness of the US dollar plays a role in the price of gold, and a sell trade would exist if we did start to see that dollar strength trade begin to kick in tomorrow. So there's a few of these markets. Just to recap, the euro dollar to the downside, the dollar yen to the upside, the dollar Swiss to the upside, the Aussie dollar potentially rolling back over to the downside. You'll see technical analysts doing things like this. There's quite a strong downward trend in this market. So for now, is this market in an uptrend or is it in a downtrend? And for us, it's in a mini downtrend. So we're getting these rejections of these levels on multiple occasions, and this is another one. So are we looking to buy? Not just yet. We're actually anticipating that this market can actually continue to roll over. Now that's just purely technical. That's not really taking into account tomorrow's news events. Something happening overnight, and we're getting erratic, explosive price action, whatever the case may be. We're only really talking about if things, start to evolve as we would expect. And that's really what trading is all about. It's doing your preparatory work to be prepared for when the moves occur, and almost wait for the markets to come to you. And it sounds quite perhaps quite straightforward or quite simple. Practice of that is quite difficult. That's of course why we set up the live trade room in the first place. So I'm just looking at the time. We're just closing out the time there now. So I do apologize, but we do need to wrap up this sort of live broadcast here through YouTube. So we can safely say we're pretty much consolidating in the pound dollar. We do have a bias to the upside. We want to look at previous price action, which is eventually pushing higher, and we may experience a prolonged period of sideways moving price action before we get the move. But that's a directional bias. And then the DAX, just to finish off before I let you guys go. Any questions, feel free to post them into the chat box as always, guys. We're in this sideways moving pattern. We do like this market to the downside, but if prices break above the 14,000 level, then that sell trade at that price no longer exists. So if it bounces back up, this is the next level at which to sell, the $40 level, something like that, 35, 40. that will be the next level to sell from. So just bear that in mind, and do your correlations, understand what's going on across the other equity space, and look to go with the markets. It's much better place to be if you can go with them rather than going against them. All right then, guys. So look, on that note, thank you very much for joining us. We're delighted to be back online, and to be able to sort of go live with these webinars. So we do hope you can join us. Please do subscribe to our channel. Click the bell down there below the video. You'll be notified whenever we go live. Feel free to come on board, join us, contribute, ask questions, throw trade ideas at us, whatever you like. This is an opportunity for you to hopefully pick our brains about trading these financial markets, and we can trade these opportunities together. So so that's really what this live trade room really is all about. So if we could be of any help to you, do contact us, and feel free to go to our website as well for more information. If there's anything you would like to ask us, there's very affordable membership packages through there, so you might want to have a look at that. And you can contact us through the chat function as well, through our website, if you have any further questions. So on that note, thank you very much for joining us. We'll be back live again tomorrow at 12 noon, so we hope you can join us then. So from everyone here at the Live Trade Room, thanks for joining us, take care, and we'll speak to you soon. Bye for now.